Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, we are gonna talk about online payment stocks. Okay, so a couple of you made me this question and today we are gonna compare 5 online payment stocks. Okay, balance sheets and things like that, like I did with tech companies, big tech companies and bank stocks. Okay, so a comparison between companies. So leave me a like if you find this video interesting and subscribe to the channel. Let's begin. Alright guys, so here we have our 5 stocks, 5 companies. Visa, ticker symbol V. MasterCard, ticker symbol MA. American Express, ticker symbol AXP. PayPal Holdings, ticker symbol PYPL, and Square, ticker symbol SQ. So let's take a look, guys. All those 5 stocks are involved in the online payment business. And as you know, it's a good business right now because the world is going through a digitalization of payments. Okay, so basically paper money are gonna disappear in the next 10 years. Okay, 10 to 15 years depending on where you live. Okay, so as you can imagine, for those companies it's something great. Now let's see. Okay, let's go through some data, real data here. Here in this channel we like real numbers. Okay, we don't just talk. Let's see. Now, first of all, the performance of this crazy year. Okay, YTD. Visa, just a little bit above 1.53%. MasterCard, a little bit below, minus 1.30. But here we are basically at break even. Now, American Express still below, minus 28.23%, while PayPal and Square went crazy. Okay, PayPal up, positive performance in the year of 39.47%, and Square plus 30%. Okay, so revenues, this is the last year balance sheet, and this is useful to understand the margins. Okay, because we really care about the margins. The margins are helping us to understand how much revenues, the part of revenues that becomes net income. Okay, so how much money the business is making after all the expenses and all the costs. Okay, so basically we are checking the efficiency of the business itself. Okay, so that's why. And let's check. So revenues, here we understand that American Express in terms of revenue is the biggest one. Okay, while Square is the smallest. Let's see, cost of revenue margin, the gross margin. Okay, gross margin, you want to be as high as possible, and the winner is Visa. But better than that, because that one, it doesn't say as much in this case. Okay, because those kind of companies related to internet, most of them, they have a cost of revenue which is very low. Okay, so what we really care is the operating margin, and let's check it out. The operating margin, here we have, again, the winner is Visa. Okay, and the loser in this case is Square. Very well, MasterCard, and American Express is a little bit down, and PayPal as well. Okay, PayPal as well. So very great, Visa and MasterCard. When we go to the net margin, so the after taxes and things like that, the net margin, the winner again is Visa, followed by MasterCard, great again, and not very well, American Express, PayPal, and Square. Okay, now from PayPal and Square, those companies are pretty new. Okay, so it's quite normal to have operating margins and net margins that are pretty low. Okay, because of investment in new businesses and things like that. I don't like American Express net margin. It should be higher. Look at that. We have the revenue, which is like almost the double of, no, more than the double of MasterCard, okay? And almost the double of Visa. But when we go to check the net income, we have that American Express earns less than MasterCard and Visa, okay? So that's why I'm telling you the margins are important. American Express business is not as efficient as Visa business, okay? Now, perfect. Let's go through the balance sheets, okay? So the health of the company in terms of costs, liabilities, and assets. This is the first quarter of 2020 balance sheet, okay? So let's check it out. Total current assets and total current liabilities. We have the current ratio, okay? So the current situation, the ratio between assets divided by liabilities, and we want to be higher than 1. Now, all of them are higher than 1. The winner in this case is Square, okay? 2.19, very well. Not bad, MasterCard, 1.87, and Visa it's a little bit lower, okay, 1.25, but it's above 1, so it's fine, okay, it's fine. Now Square 2.19 because they have a lot of cash aside, okay. Probably they should invest those cash in new businesses, okay, so to increase the margins and to make more money. Now they are keeping this cash aside because of this sort of crisis and uncertainty, okay? So it turns out that in this case, they have the better current ratio. Let's check out now total assets and total liabilities. We have the ratio in terms of total assets and total liabilities. The winner is Visa with 1.90. And the worst one is American Express. American Express, that as we are gonna see now, is the one with the higher debt ratios, okay? So debt to equity ratio and net debt to equity ratio. Why there are two ratios in this case? Because those companies, they have a lot of cash, okay? They have a lot of cash. So sometimes the debt to equity ratio can be tricky because it's in reality, like in MasterCard, it doesn't show the real situation. MasterCard debt to equity ratio, so total debt divided by equity ratio, is 229.87%. So it's very high. But when we go to see the net debt to equity ratio, so we deduct the debt by cash and cash equivalents, and MasterCard has more than 10 billions in cash and cash equivalents. We find that the net debt to equity ratio is 41.66%, which is not too bad, okay? It's not as bad as this one. So it's fine, I would say. The worst case here, it's American Express, okay? American Express, which even with the net debt to equity ratio, we are almost at 100%, okay? So they have a lot of debt, okay? 95.16%. Very low PayPal and very low Square. As I told you, Square, they have a lot of cash, okay? So when we go to see the total debt to equity ratio, they are above 100%. But when we take the net debt, because they have a lot of cash and cash equivalent, it turns out that basically they have a 0% net debt to equity ratio, okay? Great. Let's now check market cap. The market cap, we have the Visa is the biggest one with 419 billion. Followed by MasterCard, around 300 billions of market cap, and American Express, 71.9 billion. PayPal, 177 billion, and Square, okay, the smallest one, 35.8 billions. Now, the book to value, when we look at the book to value, we understand that all those companies are not value companies, okay? Why? Because the price of the market is at least 3 times more than the price, so the value of the balance sheet of the company, okay? So look at that. Visa is 12 times the value of the balance sheet, okay? So in the market, Visa is valued 12 times more than in the balance sheet. Look at that. MasterCard is very crazy, okay? In the market, MasterCard is valued 54 times more than in the balance sheet, okay? Because the market cap in the market for MasterCard is 296 billion, okay? While in the balance sheet, the market cap is just 5.4 billions, okay? So that was this 54 means, and it is already growth a lot, okay, MasterCard. So when you look at that, you understand which one has the most probability to grow more, okay? And MasterCard, well, it can grow more, but 54.5 is not a small number, okay? It's not a small number. When we look at the P ratio, we have that the 5 years average, so the P ratio of today and the 5 years average P ratio. We have that the difference, Visa is 1.54% above the P ratio average, so basically is at the average, okay? MasterCard, it is 5.72% above the P ratio average. American Express, it's below the average, so minus 20.53%. PayPal is almost 100% above the average of P ratio, okay? So it looks like it is going a little bit overvalued right now, okay, in terms of PE ratio, okay? And Square is plus 31.74% above the average of PE ratios, okay? So for Square, the PE ratio is not over the last 5 years because they have become profitable just the last year, okay, in 2019. So this is 1 year average P ratio, and 123.28 P ratio for Square is very, very, very high, okay, and 95 here for PayPal as well. It means that the market right now has a very high expectations on those companies, okay. In the case of Square, the market is paying right now $123.28 for every single dollar of revenues that Square is making, okay? So very, very high expectation of growth by the market, okay? So if they're gonna do great, okay, but when there is this much expectations, it means that a lot of investors are already in, and if you, let's say, don't make them happy, it's more likely that the price is gonna go down a little bit, the higher, okay? Very high P ratio for Square, while in Visa, and we are, okay, in the average, American Express is the lowest one, okay, because the market doesn't like much American Express. Very bad margins and high debt, okay? Now, let's go to check revenues and earnings history, okay? So from 2016, and we have that Visa, MasterCard, American Express. Visa, wonderful growth of both, okay, consistently, revenues and earnings, wonderful. That's what you want to see, okay. MasterCard, very similar, but in 2017 earnings went down a little bit from the previous year, but overall it's fine, okay. American Express is not so consistent, okay, especially in earnings. they have debt, so sometimes it's a problem with expenses, with costs, and that makes their earnings, they are not consistent. So we have like 2016, 2017 down, 2018 up again, 2019 down a little bit, and so it's less consistent. Okay, it's not that we can see clearly the difference. Okay, Visa, American Express. PayPal, we have revenues that are going high, and it's fine, but earnings, they remain almost the same. Okay, because of probably margins and because they are investing more. Okay, but it's positive overall. This is positive. And Square as well is a new company, small company. Revenues are going high and earnings are were negative, and 2019 is the first positive year for Square. Okay, so overall considerations, I would say that Visa is the safest bet. Okay, so wonderful net margin. This is wonderful, guys. Above 50%, it's wonderful. And solid companies, solid growth. Now it is safe. Okay, it is safe, but it is already a big company. Okay, so if you, well, it is gonna be difficult to see a 4x 5x on this company. Okay, while American Express is probably the worst one. I don't like these net margins, and they have debt. Okay, they have debt. They should try to become more efficient. If they become more efficient, it would be okay. It would be a great company, and probably also the price can go higher. Okay, so American Express, in my opinion, has a problem of efficiency. Okay, comparing to the others. PayPal and Square, they are the most speculative ones. Okay, especially Square. They are Square is very small company and with a lot of expectation. Okay, so with the difference with Visa, Visa is solid, is consistent. Square is new, it's small, and it has a lot of expectation. It can be the company that can do 3x in the next 10 years, but at the moment there is a lot of expectation in the price. Okay, so it's not cheap in my opinion at the moment. Speculative bets, PayPal and Square, while if you're looking for a safe bet, Visa. Okay, so this is the end of the video, guys. I hope you find it interesting. Leave me a like and leave me a comment below. Tell me what you are doing and subscribe to the channel. Have a wonderful day.